Hey everybody, this is Jamin Kirkwood with Secure Financial Management with your October 2017 Economic Update. In this update, I'm going to discuss a few of the items that have affected markets in the last few weeks and what they might mean for you as investors. Now, please stay tuned to the end for a required disclosure statement. Well, unfortunately, in the last few weeks, the news cycle has been filled with a lot of tragic events, whether it's hurricanes hitting Houston and Puerto Rico, the terrible situation in Las Vegas, and also, of course, North Korea and Iran have all been making headlines in the news. But something interesting is that none of these events have had really even a slightest impact on the markets. They keep making new highs. The S&P recently just crossed the 2,500 mark for the first time. It's very interesting to watch this growth in the markets be completely unfazed by events that are happening with the rest of the news cycle, be they political, natural disasters, things of that nature. That's something that we're really keeping an eye on here. It's always a little bit concerning when you see the market continue up and up and up without too much of a breath. So it's something that we're going to be watching closely and making sure that the markets aren't getting too far ahead of themselves and too pricey. And tied into that issue also is that in September, on September 20th actually, the Federal Reserve had a meeting where they looked at reducing their bond buying program. Now, when you hear bond buying program, you might think, well, what's that got to do with anything? Well, you might have remembered the words QE, quantitative easing, that were around. You hear that term a lot. 2010, 2011, 2012, 2013, and it hasn't really been in the news that much recently, but quantitative easing or bond buying program were really initiatives that were started back in 2008, 2009 when we had that big market correction to try and prop up the economy, to get things going. And now the Fed is at the stage where they're saying, I don't think we need to do that anymore. In fact, we want to start taking some of that extra capital, some of that extra reserve, some of that cushion that was in the economy, taking that out of the economy. And that's something that us here and Wall Street and the investment community in general are watching very carefully and a little bit with a skeptical eye, because we don't quite know what's going to happen once that quantitative easing starts coming out of the markets. The opinions range everything from it's going to be disastrous to there's going to be no effect. At least right now, there really hasn't been much of an effect, but it's something that we're going to be keeping an eye on. And anytime you hear about bond reduction programs, quantitative easing, that's what they're talking about. It's taking that extra cushion, that extra capital out of the market. Now, interestingly enough, the European Central Bank, which is Europe's version of the Federal Reserve, they're also contemplating doing the same sort of thing, basically saying, well, we think the economy's back on its feet pretty solidly. Now it's time for us to start looking at taking some of that extra capital, that extra reserve out of the market, because it's not needed anymore. So something that we're going to be watching very closely with all of your portfolios, and any of you that maybe are self-managing your portfolios or you have investments elsewhere, it's very important to look into your portfolio and see what sort of exposure you might have that could be affected by any of those bond reduction programs. Now, a lot of questions that have been coming into the office here, and you've probably been interested in this yourself, is, wow, what's been going on with the markets lately, especially an index called the Russell 2000. The Russell 2000 has really lagged the markets most of the year, but in September alone it was up over 6%, which is pretty incredible for a 1-month gain. The general stock market and the S&P, the Dow have been doing very well, but the Russell was a real standout. Now, the Russell is made up primarily of domestic US companies, and part of what their gain, the stock market in general, but particularly the Russell 2000, part of what their gains have been associated with is the new tax plan that President Trump has been talking about. And they got a real boost from just the potential, right, that there might be new taxes in place that are more corporate friendly. So if this all goes through, it's going to be great, right, for these companies, and it's going to lower their tax bill. Maybe they have more cash in their system to invest or hire more people. My concern is, when we're looking at this, is we know how difficult it is to deal with Washington, right? We know the gridlock that happens there. So something we want to keep an eye on very carefully is, well, we've had this big run in the markets dependent upon tax policy being changed. Well, what happens if it doesn't, right? What happens if it's a little bit more difficult than they might think? So watching what happens with this tax initiative and possibly any legislation that comes through and what sort of roadblocks it might hit will be paramount in making sure that any of those gains that we've experienced, perhaps we capture some of those gains now, or possibly what might happen with the market if those tax plans don't go the way that everyone's hoping, everyone's thinking. something to keep an eye on with your investments, and something we're certainly watching with all the portfolios that we manage here. Now, one last thing I want to mention before I close out is that we are moving in, or we already are in the fourth quarter of the year now. It's always a wise time to look at tax planning with your investment strategies. Now, if you have IRAs or some other sort of qualified account, this doesn't really affect you that much, but any investments you have outside of IRAs, what we call voluntary accounts, accounts that don't have those special tax privileges like IRAs do, it can be very, very beneficial to look at any sort of tax strategies around that. Perhaps selling any investment positions you have that are at losses to offset any gains that you might have. Now, this is obviously something you want to speak with a tax professional about, but as we move into that final stage of the year, it may be very wise to look at any sort of tax planning you can do around your portfolio. That's something we're absolutely happy to talk to you about here, or also if you want to contact your tax professional, as I mentioned, it would probably be a great thing for you to take a look at. Well, that's it for the October 2017 economic update. As always, everything we've discussed here should not be considered a recommendation. If you'd like to discuss your personal financial situation, give us a call here at the office at 210-428-6250. We'd be happy to speak with you.